Jerry Harvey famously and not surprisingly claimed consumers would never buy furniture online. Tell that to Temple & Webster, the online retailer shaking up the $15 billion furniture and homewares market. It's just acquired the Australian arm of rival Wayfair, a US-listed giant worth $3.1 billion. Temple & Webster was started 4 years ago and expects to turn over $50 million this year. I caught up with co-founder Brian Shanahan. Brian Shanahan, thank you. Now, normally big US companies come in and buy up Australian startups, but this time it's gone the other way around. How did it come about?
So Wayfair have had a US subsidiary in the Australian market for about 5 or 6 years, but they made a strategic decision to actually focus on the US market. So what they did is they looked for the largest player in Australia, which is ourselves, Temple & Webster, and approached us and thought we'd be a great natural home, if you like, for their local business.
So the Americans couldn't compete?
Well, in this particular case, the Aussie business has done pretty well. So they approached us, realising that actually they couldn't compete with this, with Temple & Webster, and thought, OK, let's do something together about putting the two businesses together. So we saw this as a great opportunity to acquire their business.
And so does that mean you got a pretty cheap price?
Look, I can't disclose price, but it certainly is a price that stacks up on many grounds.
Now, online furniture is a newish kind of space. At one point, Jerry Harvey said online furniture would never take off.
Right.
What do you think about that now?
Well, people used to say that I'm not going to buy clothes online. I want to go and touch it, I want to try it on, I'm not going to buy online. But actually, the clothing category is one of the fastest growing category online today. And likewise, actually, for the furniture and homeware space, people used to sort of say, I'm not going to buy sofas online. But we're selling hundreds of sofas, every month. So it's just going to continue to increase the penetration, I guess, if you like, or the migration from offline spend to online.
How is technology changing to make online a more attractive offering?
In the old days, actually, it was really hard to get a sense of what the product was like. But these days, with the ways that the great, fantastic photos that are taken of different products, showing the product in situ, so it's not just showing the product by itself on a white background, but actually showing you the product or how it might look like in your home, really helps to inspire the customer. So I think in the old days, it was just about the product, but now it's about inspiration. And it's almost like bringing in a magazine-like experience to the consumer so they can get a sense of what it's going to look like in their home. And that really helps to engage them and makes them a bit more comfortable about the transaction they're making.
So you essentially sell and then market other people's products. How did the suppliers fare in this?
It's great for the suppliers, actually, because there's lots of suppliers in Australia, and what they're looking for is a channel to actually showcase their product. And it's really hard for them to actually get their product into some of the leading online retailers, the Freedoms, the Domains, the Myers, the David Joneses. So they're coming increasingly to people like Temple & Webster so that we can put their product in front of actually probably Australia's largest focus group of homeware lovers in Australia. They're putting it to us so that we can actually get their product in front of other consumers.
So in terms of the value proposition for suppliers, it's about exposure?
Absolutely. We've got over 1 million members on Temple & Webster. We're looking to become the first place Australians turn to online when they're thinking about furnitures and homewares. And what those suppliers are looking for is an opportunity to get their product in front of a great audience.
In terms of competition, obviously there's recently been the US entrant Pottery Barn. Any worries about competition there?
Well, look, Pottery Barn have done a fantastic job. They're different to us, of course, that they're a multi-channel retailer, so we are just an online-only retailer at the moment. But I guess one of the challenges that they have is they're just sort of stuck with one particular look. And if Pottery Barn's not your look, then it's not the destination for you. Temple & Webster is very different in that we change our look every day.
Now that you have acquired Wayfair, you've got a much larger exposure to the Australian retail market. Can you tell us about how this acquisition will work and if there are any synergies there?
So, the thing about the Australian online, I guess online is a share of total retail in Australia for our particular category. It's probably about 3 to 5% of total retail is currently online today. We're going to see that tripling over the next few years. So, huge opportunity for us to actually, it's less about synergies, but invest in growing both businesses, not just Temple & Webster business, but also the Wayfair business. We really want our business, our brands, to be the first place that Australians turn to online for beautiful homewares and furniture, and we're just starting this path. So it's going to triple, if not quadruple, in the coming years.
In terms of being earnings cash positive, when do you expect that to happen? So
at the moment, it's all about, investing in growth, winning the market, if you like. So we're focusing more about sort of attracting more Australians to Temple & Webster and our new brands. Profitability follows.
So do you have a time frame?
Next few years. The thing is, there's so many opportunities, that we've got in front of us. And those opportunities don't usually become cash positive on day one. It takes time to invest and grow a brand. And we know that, our board knows that, our shareholders know that, very supportive of us. But, profitability is absolutely in part, next 2 or 3 years is what we sort of see.
Brian Shanahan, thank you.
Great, thank you very much.